Welcome to the bullpen. This is our monthly conversation of the markets featuring Tommy Grisafi from Advanced Trading based in Mayville, North Dakota. Tommy, as always, appreciate the chance to connect and talk about this roller coaster ride we've been on.
It's been a wild one, Don. So many things to talk about. Towards the end of the month, we had the USDA meeting, and then we had that long holiday weekend. Hopefully everyone had a safe 4th and enjoyed your time off, but the markets weren't kind to anyone when they reopened. So USDA announcement was very bullish beans, and we traded up and then immediately traded lower. It was neutral corn and wheat, but yet we markets started trading weather immediately afterwards. So looking at the markets, we've had a heck of a turnaround. This is hard. It's hard for this to come out of my mouth. Spring wheat at as of yesterday was over $5 off the highs that were just made 45 days ago. So let's just do the math. Someone who has 100,000 bushels of old crop spring wheat didn't sell it. It's worth $500,000 less. Pretty decent sized farmer out west, you grow 1 million bushels of spring wheat. It's a lot of money, worth a lot of money less. So these are big numbers. Every 100,000, 500,000 off, 5 million per million bushels. And to be honest with you, there are farmers and clients that farm that big. And again, people are pretty scared and skeptical of futures and options. Maybe they don't like to get forward sold, but if history is repeating itself, anytime we have a big bull market with an inversion, not only is it smart to sell the year that's inverting if you have product left, and it's also smart to sell the next year and the next year. Very difficult for people to do. I can't sit here and tell you that I have a bunch of clients who do that and have that discipline, but yet there are some people who do it. And I do work with a few of those guys. You've met a few of those yourself, Don.
Yeah. Well, obviously we've had a huge retracement since the Fed made its interest rate announcement in mid-June. They've made every indication they're going to make another bump here at the end of the month when they meet the next go around. Is that the reason the funds have made their major exodus here? Well, why do you see the major turnaround here?
The market became scared. There's a few things that I'd like to talk about. One is crypto. Folks may think in the ag community it doesn't affect them, but it does. When an asset class, and crypto did become an asset class the last 5 or 10 years, when an asset class is worth 3 trillion, and within 4 weeks it's only worth 1 trillion, and you see crypto companies and people who say you could trade crypto on their platform actually going broke and not letting people withdraw money. When a platform or a business or a bank, like you talk about the old days, run on the bank, when you hear you can't get your money out, it scares people. So yes, the Fed is raising rates and they want to tame inflation and commodity inflation, wage inflation. The overall stock market is off 25 to 35% off its highs, depending on whether you're trading a conservative stock or say a NASDAQ stock. And the NASDAQ and the crypto are very much tied together. How do you tie that back to corn, wheat, and beans and everything else? It's money flow in, it's money flow out. Maybe people did have a tremendous winning position in the grains. As you know, the grains have been in bull market phase for over 2 years now since the pandemic low. And bull markets typically last 12 to 18 months, sometimes not even that long, but we're into a major stretch of a bull market, and that has ended. I mean, we're still, you could say we're friendly and $6 corn is to be respected, but input costs went up tremendously also. And although I'm very sad for what producers haven't sold in 22, what really scares me, Don, is what they could have sold for prices in 23. So when you look at D's 23 corn, we went up to about 675 the other day. Just yesterday, we traded below 550. So big move in the 22, 23. Yes, funds have exited over 2/3 of their length. We have a new number coming out on Friday, which is the CFTC commitment of traders. We started to see the funds exit very aggressively last week. We had big selling Thursday, big selling Friday, holiday weekend, more selling on Monday. I bet you I would put a dollar or two bet that tomorrow you'll see that the funds have exited quite a bit. Not only have they exited, they're actually short some of the wheat contracts. So that explains some of the price action. Maybe it's not what people want to hear, but when the money comes in, it took years to get the markets this high, and it took only 4 weeks to take it down.
Yeah. Fundamentals, though, really haven't changed that much, have they?
No, and when they haven't, and we still fundamentally we're bullish. Let's talk cash market. That's where you're going to sell your grain. Cash market's still solid. I think you're going to see a great basis in the North Dakota region, the Red River Valley for months and years to come. They want the grain up in Canada, although Canada might grow a much better crop this year. Exports should stay strong. Demand within the state, we're finding more ways to use our own grain. A lot of good things, a lot of things looking up for North Dakota. Of course, as you know, we did the boots on the ground crop tour. Folks did have a late start, but you're out there doing some field days. You're saying that the crops look pretty good. We could use a little rain, but we have the heat. We have adequate moisture. It still can be a great year for bushels. And of course, as you know, I always say we're in the bushel business, but I would be shocked, absolutely shocked, if wheat got anywhere near its $14 level. It would be wonderful. We just got back to $10, $11. We'll see. We'll go in a time capsule, look back at this in a few months. But Canadian farmers reported they planted a lot of wheat. North Dakota farmers planted a lot of wheat. And overall demand for our wheat, it's not like they're just coming over and buying it by the boatload. They do occasionally. We have some exports, but we'd like to see some more robust exports in wheat. So yes, the fundamentals are still massively bullish with what's happening with the Ukraine, India banning exports. The most optimistic thing I can see, and it's not good for the world, is that Europe as a whole has a major energy crisis. As we record this today, natural gas is back up 14%. Crude oil is up $5. Europe's in trouble when it comes to energy, and they're electric. I give credit to Bloomberg chart I looked at. Electric trading in Europe hit all-time highs. So natural gas is 4 times higher. Electric's a lot higher. As you know, if you travel abroad, you pay for gas like by the liter. It's very expensive for energy. The German government announced that they're already, and it's summer months, we shouldn't be using as much energy to heat homes and everything else or cool homes, but they're already restricting energy use. And that's just a horrible situation to be in. So that all ties back to Ukraine and Russia's their ability to communicate with Russia and buy energy based on rubles. So it's very much playing into grains. I do not expect a big crop out of Ukraine. I do not expect a lot of it to get harvested. Just as of last night, Russia blew up 2 more grain facilities in Ukraine. So fundamentally, if Ukraine was that important, it's they're not involved currently.
You mentioned oil. We came back up over that $100 mark, but it was interesting to see what a month ago we were $120 crude, and then we dipped down into that $98 territory. It was pretty dramatic change there as well.
Extreme volatility. Hey, I have to admit, it's nice to go to the pump and see that gas is $4.50. But when you look at that diesel price, still a very high price for diesel being paid. And when you tack on today's rally, it looks like we'll be heading right back towards $5 fuel here later in the summer, $5.50, $6 diesel. It's quite a tax. I talked to a business owner that's not far from your studios yesterday, and he said he was going to a meeting. I said, what are you guys going to talk about? He said fuel cost, labor cost, the cost of insurance for our employees, the ability to hire qualified employees. It's still a problem. And when you put the food cost and the fuel cost into there with this labor shortage, especially up in the northern states, I'm sure as you drive around, you still see a lot of help wanted signs. So it's a tax on the people, and it wasn't for a day or a week. You're not going to be able to watch the president. I watched it. You watched it. He said gas station owners need to lower their rates. That would be like me looking in the camera and saying, Don, you need to do the right thing. There's a war. You need to lower what you charge for advertisement. You're not going to do it. They're not going to do it. There's a charge. There's a cost to doing business. You can't, as the president of the United States, just say, hey, whatever business you have, do business at a loss because we're at a war. This isn't World War II. They didn't just bomb Pearl Harbor. It's a different scenario. So poor decisions made by our government. Speaking of governments, big shakeup in the UK today, seeing massive resignations over there. Started a few days ago, and then it ended with the final resignation of their leader. So political upheaval across the world. A lot of this stems from COVID and the war in Ukraine. It's really starting to drag on. And unfortunately, it doesn't look like any sight is near. And that will create incredible volatility, which should be opportunities for farmers that are in your region.
How do you mean when there's volatility? How's that an opportunity for the grower?
Well, some people do like to forward sell and they get very aggressively forward sold. So if someone's forward sold, they now had a chance the last few days to buy it back. Of course, many people did not get forward sold enough, and they may get another chance to sell it on a rally. So for traders like me, people who own seats on the exchange or like to trade, we like when things are moving. Now, unfortunately, when you go down 20 days and 20 nights, it becomes a little overwhelming. But don't forget, Don, where we were just a few months ago. A few months ago, I was doing the show with you and others, and I sat here and told you Dees 23 corn has been up 23 days in a row. One of the biggest record winning long streaks ever for a crop that you could produce next year. So we all loved it when it's going up. You can't complain when it's going down. Volatility is here to stay. There's unrest in the world. And you know what I forgot to mention? Speaking of unrest in the world, take a look at those Dutch farmers. I don't know if you know anyone from over there, if you've interviewed anyone from over there, but just incredible turmoil going on with the Dutch farmers as they're told for environmental reasons, we're putting, I don't know what the numbers are, but it was quite a large amount of farmers potentially, if this rule or law passed, out of business. Let's hope we don't get those type of politics here in the United States and Canada.
It's pretty mind-boggling. Every time you think you've seen everything you can, there's another new development that comes our direction. Crazy time.
Absolutely. Yes, sir.
Well, as always, Sam, we appreciate the chance to connect.
Thanks, Don. We'll do it again next month.
You bet. Thanks for joining us for our monthly update, Talking Markets. It's the Bullpen, talking with Tommy Grisafi from Advanced Trading based in Mayville, North Dakota. I'm Don Wick on the Red River Farm Network.